Hey traders, Aleks is here from Trading Analysis. Welcome to today's stream. Today we're going to talk about the XLY and it is the Consumer Discretionary Sector ETF. And I'm going to explain you through our process applying the RRGs or relative rotation graphs and also the Elliott Wave methodology as a filter. So how we came up to the potential conclusion that this sector might have a trouble ahead. That trouble might last for some time, and we're gonna walk you through the signs that we are seeing both on the charts and both on the two major stocks which has the biggest weighting in this sector, which is Amazon and Tesla. Let me show you what we have seen in Tesla before. I'm going to show you then the RRGs of the XLY and also Tesla and Amazon, and then I'm going to show you wave counts and developments that we see potentially might happen in Tesla and Amazon, so we can have a whole picture what is going on there and why do we think it's little bit potential trouble ahead over there in that sector. So let me show you a couple of slides of the wave counts and how this progressed in 2023. This will be through the Elliott Wave lens. So first we became bullish on Tesla, looking the potential breakout. We labeled this as a wave 1 and 2 and a potentially smaller degree 1-2 developments from where we should break this pretty much strong upper trend line and resistance and moving higher into this wave 3 of 3, which is usually pretty strong and vertical, and it reaches a pretty nice new levels. And we have some fib outlined here from our members, for our members, where we looked for a potential target. But then we have seen some hesitation in Tesla, and we have seen that we are not breaking out higher, and actually this correction became a little bit bigger. So we switched for another possibility where we did looked that Tesla is in a potential triangulation, and that actually this triangulation will last for some time, and probably we will wait a couple of more months in advance, which I'm going to show you later, where the Tesla stock is heading and what are some targets that we are looking. But this was our initial impulse that we tried to actually stay bullish, but already was suspecting a bit because the breakout was not pretty much strong, and we did immediately looked for alternative scenario, and as you can see we labeled these trap doors where we have seen a potential wave count of this nature plays out if the trapdoor are crossed, and this is the latest one where we actually discussed that with our members on our streams, where Tesla levels are pretty much crucial. So we labeled this as a potential ABC pullback in W. This one too, which I showed you in the beginning, was already impossible because of the wave degree invalidation. So the lesser degree wave 2 cannot be longer in price, and pretty much I think in duration as the primary degree wave 2, and actually we knew in this moment that the possibilities for a Tesla heading higher is pretty much slim. So our option that this will be the X wave resistance around 260 to 80 pretty much came in play, and of course the resolution I think most of you already know. Tesla is trading sub 180 now, and I'm going to show you the wave counts that we are currently hold for Tesla and what we are seeing ahead. So let me now go in the RRGs, which very much became our primary tool with the Elliott Wave methodology, with which we filter actually what is going on, which sector we should look and where we should search for potential trades on stocks. And RRG for the XLY sector looks like this currently. So RRG has 4 quadrants. In the middle is the S&P as a benchmark, and sectors with all of these stocks actually rotate towards this clockwise towards this and through these segments. So while they are rotating, you can actually see their positioning, and you can actually either dismiss a potential sector for a long trade, or actually search for a long trade if the rotation is indicating to you that the sector is going into improving and it is already in a leading sector. Everything moving down into weakening one and also into lagging one will indicate that these are the sectors where the stocks might be positioned a little bit more on the downside, and that was not something which we will look for if we want to have a long position on that stock. So here the situation with the XLY is that we have a monthly and weekly, and on the monthly level we are seeing that XLY started pretty nicely to move towards leading sector, but then suddenly we see this hook back, which is indicating that this sector might be losing its momentum and might be going further lower towards this weakening one, which is still not the case because this is the monthly level, so changes are a little bit of a slower nature, but you can see that clearly on a weekly one. So this sector came pretty much nicely out of the weakening sector into improving one, but then as you can see hook here, it transpired on a weekly that is hooking back into weakening one. And this is already indicating to us that we should look what is going on the couple of major stocks which has a major weighting in that sector. We should look through the Elliott Wave filter what is going on there and actually justify what the RRG is telling us, and actually look for a potential a bit of a trouble in that sector, and we should avoid putting this sector on our stock watch list for a long trade. So let me go now where we did the RRGs and actually scanned what is going on. So let's look live charts. First, we will go through Amazon, which is the biggest weighting, and on the Amazon situation for us is relatively clear. So from these lows in 2023, we are seeing pretty much clear 5-wave move on the upside. So from January 2023, we have a nice move up in a wave 1, pullback in a wave 2, pretty nice wave 3, which you can also nicely subdivide into 5 waves, which is very important if you look stocks through the lens of the Elliott Wave. Pullback in a wave 4, wave count invalidation was not touched, which means that the wave 4 cannot enter the territory of the wave 2 because the wave count will become invalid, and we didn't see that. But now, as you can see, we are start to getting this selling a little bit more often, and the upside are getting a little bit tired, and we have only 3 waves up, and therefore we portray this move on the upside as a potential ending diagonal, which is signaling to us that this wave 1 or wave A on the upside might actually stop at this fib zone between 164 170, and we might see some reversals and a pullback in 3 waves which might follow soon. So for us, looking through this lens, we clearly see a 5-wave move on the upside. We clearly have devised or put targets where the reversal might happen, and we will monitor it, especially as you can see the RRGs are suggesting to us that these reversals might happen. So let me go over Tesla and let me show you where this potential points for Tesla is. So overall wave count in Tesla, we are looking higher in Tesla overall. So this is a weekly chart. So from the beginning, if this is a beginning, so that's always debatable, but this is how much we have data on this provider. So this is a 5 waves up in one, pullback in a wave 2, very sharp vertical wave 3. So this is definitely a wave 3 character. and then we are falling into this long consolidation, which is usually a triangle or a wedge in a classical technical analysis. So I have shown you before how did we filter out, just looking the wave counts, why the Tesla actually, and what was additional clue for us, why didn't Tesla break out immediately from here on the upside, as we originally was thinking so. But then we have seen this pullback which doesn't match this previous one, and we already knew that something is wrong. So we start introducing the reserve wave count with this X wave with the resistance around 260, and then we looked for a move lower in this Y wave, which should have 3 waves to complete the C wave in a triangle, and then we are left with D and E, and we think that potentially depends how quickly this waves develops, we might be completing this triangle somewhere in between, let's say, June, July, August 2024, and from there we might see some impulsive movement on the upside and then continuation of this uptrend. So this sideways consolidation definitely points out that we are in a pause between the bulls and bears. It creates a balance, but that balance cannot last forever, and these triangles are best to portray this kind of balance, and you can time it from perspective where it's going to end, but you need all 4 legs to develop pretty much so you can say triangle is over, and also you need a little bit of a confirmation to show you that you're going to see this sideways consolidation breakout and continuation higher. So let me go on daily to show you a little bit more closer look on Tesla. So usually one of the legs in triangles are complex. This might be this leg in a C wave. So we have an ABC move for W, X, which is a connector, and then now we see 5 waves down in A. We are looking for a small pullback in a B wave, and then a move down in a C wave, which will basically take us to the area between 120 and 140, from where we should start tracing out another 3-wave move in this D wave, which will pretty much confirm us that we are in a triangle, and that we're gonna need E wave down as a wave 4, and then potentially continuation to higher levels. So wave count invalidation of this triangle is here, so we can put it and label it. This is end of the wave A, so 101.80 will be 101.81 will be a wave count invalidation where this triangle or this pattern is no longer valid, and we will look for another solution as the pattern is concerned. But we don't think for now that this will happen, and our targets, as I said, will be from 120 to 140, 150 in Tesla, from where we should see a further move on the upside. So thank you guys for the attention. I hope you enjoyed this process, overall going through the RRGs and looking how actually we establish some of the market outlook, looking also at the macro level at the beginning of the week, and then we filter down our process through the RRG, looking for potential troubles in some sectors when they hook on the other side where they are moving positive. And also we do filter through Elliott Wave to actually time and look where are the potential targets if some stocks are moving lower, and where should be involved in the case we see some confirmations or some price rejections from the levels that we are looking. So if you want to see more of this, what we do, you are free to visit us at tradinganalysis.com. I'm Aleks, as I said in the beginning. I'm Chief Elliott Wave Analyst, so my task is to look all of the supply that Julius, which is the founder of the RRG, Terry and Todd gives me for RRGs, and Todd is a Elliottician as well, but I do most of the main work in filtering all of the RRGs through the Elliott Wave work, and it is pretty much fascinating how this works. So tradinganalysis.com, you can take a trial and see how do we go to this process on a daily basis. So thank you very much on the attention, and see you at Trading Analysis, guys. Up to the next update. See you. Bye bye.
Hi, it's Todd from tradinganalysis.com. Thanks so much for watching. Listen, my team and I have so much to share with you in terms of our technical analysis, our fundamental analysis, portfolio management tactics, trading in and out, maybe options, sector rotation. Let us know what's most interesting to you. Maybe drop that in the comments section and we'll do our best to work it in. Also, consider clicking the subscribe button and the bell icon to be notified when we put out new videos. And finally, you can check us out at tradinganalysis.com if you'd like to see us manage our real portfolios in real time. Thanks again for watching.